Hello and happy Monday morning to you. Hopefully, you had a great weekend. We're right back at it on Monday. We'd like to welcome everyone here today. And we got Amun, Elena, Will, Ocean Life, Rick, Sandy, Gary, and many others. Welcome to all. We also got Orlando, Rafa, Freire, and we have JP with us and Bill Bornhoff. In the chat, we also have Brent Moores, a fellow instructor. We welcome him. And just a quick reminder, this session is being recorded. And if you're wondering about the shirt I'm wearing here today, I slept in it as pajamas to maybe actually help the market continue to go to the upside. We'll look at that here in just a moment. Now, just real quick, I normally teach at this time, I being James Boyd. You can follow Brent and myself on X. Brent, if you like, post your handle there right in the chat. We do post educational content and announcements. Now, also remember that the information we talk about here today is provided for informational purposes only, should not be considered individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Also remember that options carry a high level of risk, not suitable for all investors. We will be using the Paper Money software application. That's one way you could use the Thinkorswim platform. We have web-based version as well if you like that, and we've done some demonstrations on that. And also there's mobile as well, which you can download on the App Store. And also remember, when we talk about investing, investing involves risk, including loss of principal. So there's always risk, okay? Irregardless, if you don't think there is always risk. That's a part of it. And today what I want to do, just briefly, I want to kind of talk about market indexes and sectors for about 3 minutes. I want to look at our current positions. And I think this is really important here. You can learn different pieces about, moving average crossovers, breakouts, bounces, the whole 9 yards. But at the end of the day, it really comes down to what's the example you did from what you learned. So I want to kind of talk about some of the past examples that we've actually done, managing those positions, stocks and options, and then we're going to talk about some new examples, okay? Now, let's go ahead and hop right in, and I want to kind of just show you something first off. If you have not subscribed to the YouTube channel, you can go right to our channel, and what you're going to notice is that link that I sent you, if you have not subscribed, right in the middle, it'll say subscribe. And on the left-hand side, anything that you subscribe to, that does not mean necessarily you paid. This is a free subscription, meaning you can actually get the content. On the left-hand side, it will show anything that I subscribe to. I click on it, and it pulls up all the past recordings and new sessions upcoming. Now, also remember that for this class, or any class, we do also have a playlist, which you can bookmark as well. So this is really the playlist for our class. Think of this as like you like to listen to a podcast and you subscribe to a channel for free to listen to the content, same type of idea. Bookmark it right up at the very top. If you have like Google Chrome, just put a little star, and that way you can always find it quickly. Now, last week we really talked about the implied volatility and selling options. The previous week before that, we talked about the bounce quadrants, okay? So those are kind of some senses of what we talked about, looking for bounces, and we talked about kind of selling strategies. Now, let's kind of talk about just real quick where those markets are. And I got to say one thing that was kind of funny, at least to me it was, and I want everyone to see it, okay? So if you go to my X page, okay? Now, I'm expecting to laugh here. If you don't laugh, I'm going to be really offended, okay? Now, everyone, I had a couple phone calls this weekend, and I felt like this at the end of those couple phone calls. Everyone deserves at least one friend that will tell you about the market rally that's already happened, okay? Now, I don't know if you have a couple friends like that, but it's just always interesting. So you might be looking for some friends who actually are looking to just kind of see market bottoms of V patterns, bullish MACD divergences, W patterns, and so on. The things that we talk about, okay? Not something that's like 2 to 3 weeks old here, okay? So let's kind of go in and kind of talk about where some of these markets are. Let's take a kind of a quick look first off. Let's take some inventory. So first off, when we look at the index list, I'm on the Market Watch and I'm on quotes, and I just made a watch list. Here's indexes. Now, just briefly, if we're talking about indexes, I'll just put a little SPX, NDX, RUT, and Dow Jones right there, okay? Now, if we look at them on percent here today, all of them outside the Dow Jones are really at about 0.25% down. Oh my gosh, bear market, sell everything. That's kind of what some people kind of do sometimes. They think, oh my gosh, if we're down 0.25%, that must mean ultimate sign of weakness in the market. Remember, it's not just looking at the point movement or percent, it's actually looking at the levels of support or resistance. Now, the Dow Jones, that's the one that's actually been a little hoarse here as of today. Decent push, about a, quarter percent. And there's some stocks in there that are getting a little push. Now, when you look at, let's say, what you're going to notice is, when we talk about implied volatility plus technicals last week, they're still there, okay? Could that continue? And if you look at the trend on the daily chart, you're still in trend 3. What is your favorite color? Okay? I'm not going to say what my favorite color is, okay? What I've learned in my life is, sometimes it's better to say nothing. Okay? And sometimes non-verbal communication can be stronger than verbal communication. Okay, maybe it's green for me. Now, if we take a look at this, we said last week, it's not just on the daily charts we're seeing those trends, but it's actually starting to get on the weekly charts. That trend weekly there, okay, it's in number 2. So on the weekly charts, 2 is the price getting back above the 10-day moving average, but below the 30-day simple moving average. That's actually showing us, 2 is typically meaning that there's diagonal resistance breakouts, okay? Now, when we talk about something that's traded stronger relative to the S&P 500, it's been yours truly, the NASDAQ. In the last 4 weeks, the NASDAQ has outperformed, hence the green background, okay, that over the last 4 columns there, these columns, okay? And if we look at something that's actually been also fairly strong, we'd also want to point out the smaller caps. On Friday, we talked about not the Russell 2000, we talked about the Russell 1000. Keep an eye, okay? Now, we also brought up on Friday the breakout. This is showing, remember, the breakout script, that is a 3-day script. That's not looking at today, as we talked about on Friday, okay? So we're seeing some green there, which is showing still, testing yesterday's breakout, continuing the breakout, etc. There's 3 continuing the breakouts, and there's 2 that are testing yesterday, meaning Friday. Now, remember, when we talk about these scripts, they're not guaranteed for accuracy of timing. We want to have an understanding of what they're trying to show and verify. Now, the other thing is, let's kind of pull up these charts now just briefly. Now, what you're going to notice is, on Friday, we talked about lower shadows or tails on the candlestick. It looks like someone came to the class on Friday and saw that the price dropped down to the upward trending moving average, and somebody bought, okay? And lo and behold, the price pushes back up. So sometimes that happens, sometimes. So the S&P, even though we're down like 0.3%, we don't see any trend change, and we do not see any color change on the moving averages at all. The reason why we have that green color shading, it means the 10-period moving average is above the 20. NASDAQ, okay? Now get ready for the question here, okay? If we look at the NASDAQ and say, is there any difference there? No, there's not, okay? Price came down near the 10-period moving average, a little pushback to the upside, trying to create a higher low on the NASDAQ. Now, the question I want to know from you, what sectors are you looking at? What sectors, if a friend called you up and said, hey, I understand you in the market, I won't tell anyone, okay? What sectors are you watching? And then I'm going to tell you what sectors that we're watching, okay? Now, if we take a look at this, let's bring up just real quick the list, but go ahead and type in those symbols, please. Now, Brent, you're not allowed to type in symbols. All right, now, the one thing I will kind of want to point out when we talk about sectors, here's the list of sectors. We're using the indexes or sector indexes. You might use a different list that's pretty much just a different product type. Now, the one thing we will point out today is gold, for the first time, got back above its 10-period moving average. Keep an eye on gold. Is that trying to get more of that intermediate bounce? You are also noticing on gold a little bull fleeg, okay, right there that's showing. Now, could that get a little bounce? This is the first day it's actually been doing that. First day that it poked its head above the 10-day exponential. Now, I want to kind of, before I actually go look at, let's say, sectors or industry groups, and then Jay Richardson said financials, which we kind of talked about on Friday. We got some examples here today. Sky Low says industrials, okay, technology, and also communication services. And then Mark also says communication services. Frankie actually says industrials have been strong again today, baby. Okay, maybe he didn't say baby, but let's say he did throw that on there. Now, let's first off kind of take a look at which ones have been the strongest for the week. Now remember, what's the point of actually looking at the week percent? The point of looking at the week percent is to really kind of show which stocks, or in this case, a sector that really has most likely a bull flag pull. Because when you think about it, anything that has the highest percent, most likely, if it's, let's say, 4.69, when I pull up the chart, the one that went up the most, I mean, if this was 4.69%, there's a pull. I mean, 1 week percent, it went up. If we said, James, is there a bull flag pull on energy that was down 2.16? Doubtful. So the reason why people care about the 1 week percent, if they like bull flags, they're looking for those stocks that shoot up in the last 5 days. And if they pull back, they might be future candidates for flags. Now, that doesn't mean the investor can't look now, okay? But they're just saying, look, I'm going to start to keep an eye on them. Now, industrials, you already noted that. Tech, you noted that. Communications, you noted that. And financials. Now, the one comment I really have, someone needs to tell, okay? We've heard a lot of discussion about recession, things like that. If we're going to have a recession, somebody better tell the industrials, because we need base materials, we need energy, right, to make stuff, and then we need like capital equipment, okay? And if you look at industrials, this does not look recessionary, okay? Something's shooting up and above where we were before. If we are going into recession, maybe no one told the industrial investors yet. Now, I don't know how many of you have looked back on these charts and said, James, if I see one more tilted up W pattern, I'm going to be sick, okay? Well, that's why we've gone over those twice. It's a joke, okay? Put a couple zeros on the end of that. And what you'll notice is it broke out, and it left a long tail near the middle of the W. Don't act like you don't know, okay? Now, if we take a look at the technology, the financials, again, tilted up W, shot up really where that old high is. Could we be up near an area of resistance? Yes. If the investor is saying, James, the steeper the up move that it has been, could it increase the odds potentially of that breakout to occur? Okay, now listen to the difference here, okay? If someone said, yeah, we could be up near an area of resistance, wow, how insightful, okay? Where I think it becomes a little bit more insightful is that when you look at the upward movement, which has pretty much gone straight up over the last, let's say, 10 days, it's been 15 blasted percent on the sector in 2 weeks, 15%. Now, do buyers all of a sudden just completely stop buying because we're up near where that prior resistance is? Maybe not. What we're saying is the steeper the upside movement is into the resistance, there might be some bull flat or bull flag, and maybe where that stock tries to, or in this case, sector, breach that line. So these areas on financials, technology, communication services, industrials, just be watching out that maybe that line of resistance is not as strong as you think. If you're just listening to the first comment I made, we could be up near an area of resistance. It says we really haven't learned a whole lot about bull flag pulls, meaning the steeper up it goes into the resistance, the greater the potential, the chances are, probability, that it could go above that resistance. So might want to be watching some of these top performing names. Now, what I want to do is, are there any questions? Now, Betsy says, what is the significance of the long tails? Well, that just means that they rammed the price up higher. In other words, so at Betsy at one time, okay, and then we're going to move right to our portfolio in just a sec. But what you're going to notice is at one time, this day was a big red candle. Okay, now let me ask you just a question, and it's not to confuse anybody, okay? If this was a big, fat red candle down near the middle of the W, why would someone come in on a red candle and buy it? Well, they use that red candle or down day at that moment in time to try to buy on the dip to the support area. And then by the end of the day, what someone thought was a red candle doesn't turn it. It wasn't a red candle. It turns into a long lower shadow or tail. Now, the comment from Betsy is, what's the significance in the longer tail? It just means that they rammed that price back up quite significantly. And someone obviously I could see where the support level was, and they rammed it back up. They were trying to hurry and get in, and they pushed the price back up by buying, leaving a long lower shadow. Okay, now let's kind of spend the rest of the time, the next 30 minutes, talking about the current portfolio and then new examples. Now, what I want to do is let's go to the paper money count. And what I want to do first is I want to bring up just real quick. So when we're managing a portfolio, the tools that we like to use that could be helpful is not just looking at profit and loss. That doesn't necessarily tell what's really going on. If we said, hey, we're going to go to battle with 3 scripts or 3 headings, what could be helpful in kind of helping us read what's going on with the trends with these companies? Well, the trend column, that's number 1. That's what we saw in the market watch, but now it's just looking at the positions that we have that are stock positions. So in other words, if I looked at, let's say, Duke, and I said trend 5 on Duke, it's actually saying we're losing some momentum on Duke. Might want to start to pay attention, okay? Now, if we have a trend 3 on Mo, we're thinking, oh yeah, just keep going up, okay? So the stocks that, for example, are in trend 3, those are the ones that are just making higher highs and higher lows. The stocks that are, for example, in a trend 4, up near an area of resistance, or in trend 5, stocks that are starting to fall below the short-term moving averages, those are the ones that we want to start paying attention to. We cannot say, oh, I didn't see it. Because if we just watch the trend column, it's telling us, is that price still above the 2 moving averages or is it not? Okay. Now, again, script's not guaranteed for accuracy. You want to have an understanding of what it's showing you, and you can verify it on the chart. Now, if we take a look at this, we also see that what the technician would also like to see if they were bullish, man, they want to see the green background. Okay. They want to see that green background. They want to see that right there. Green, green, green. Okay. These stocks, those are probably not the ones we're really concerned if we are bullish. Okay. So I want to ask you a quick question real quick. In terms of Duke, is there any sell decision on that? The whole moving average for the last 4 days has been up, 20 period whole moving average down. The stock is really down 2 points from where it was purchased. Let's go look at Duke just real quick, and let's run through some before we put some new ones on. Is Duke really changing the trend? And some people don't like it when someone asks a direct question like that, because now I got to make a decision. Okay, well, it's investing. Okay, so if we looked at Duke and said, is it changing trend? Not sure if we could say that. Okay, because when we really go back and draw any support levels, all horizontal even, we don't really see that. Okay, even if I use a little closer, so on Duke, we don't really see any change in trend. We kind of just see that the stock has fallen down slightly below the moving averages. So in terms of taking action, we don't really see anything in terms of saying, hey, maybe the investor considers exiting because there's a broken support level. Just don't see that, okay? Now, if we go to the next one, which is Mo, okay, just real quick. This is where we're going to start to fast fire. But if I look at, let's say, Mo just real quick, stock which is purchased at 56, it's at 59, the trend's 3, and the moving averages are green. Double check the chart. Let's go pull it up. And then we're going to go look to put on a new one. If I looked at Mo, would you say that, hey, we're up near the prior high and sell? Or would you actually say, James, the trend is still continuing? Now, I'm going to be the first one to tell you that it's the hardest thing in the world that, for example, when you have a stock and the stock is above the short-term moving average and the moving average is the color you want, it's the hardest thing not to just like want to sell because it feels so good to take some profit. Now, some of you might say, no, it's not me. Well, some of us, that's hard, okay? So the biggest thing is right now in Mo, we don't see anything that would say sell unless you're trying to sell at a prior high, and the price is above the moving averages, and those moving averages are still turned up. Now, just briefly, the one I do want to bring up is the PLTR for just a moment. This was one of the earlier ones we talked about, and let's bring up PLTR, and that was a short put vertical, okay? On the PLTR, I want to go back and look and see when was that position entered. And what you're now going to notice is that position, if we go back and say, when was it entered, at least recently, it was on April 24th. If we go back to April 24th and we go look at the charts and say, where was that? April 24th was right there, okay? So we would actually say that was day 2 of the breakout. Now, I know what you're thinking. Why didn't you buy it the previous day? Maybe we could have, okay? I know we had at least, I think we had 2 positions, but this was from the most recent entry. Now, some investors, what they might look to do is say, James, if we go up near that prior high, I'm going to try to sell into that prior high expecting a little flag or a little pullback, okay? Now, I want to speak to this for just a moment. We all know that the gain that the investor would like is 100% of the premium. The problem is we only have 47.83%. So everyone wants to kind of like say, get a little bit more. But if you say, look, I'm at 50% and we've been in this trade about 10 days, we talk about that. If we get 50% in the first 10 days, some investors might take that. If we get 65% max gain, 65% of max gain with more than 20 days remaining, that might be someone's 80% ever. And if we get 80% ever, regardless of the number of days, that's like getting 100%, okay? The only way you get 100% is you go all the way to the expiration or dadgum near it, okay? And it has to go in your intended direction typically or burn the time off. Now, if we look at this, what we're going to do is going to sell this right into the area of resistance. We're going to right click on this. We're going to create closing order and we're going to sell. Okay. Now wait, when you say sell, we're just exiting what we have now. Okay. So vertical sell, we're just getting out of this position, flipping the position. Okay. Confirm and send. And now what you're going to notice is let's kind of put a little oval on where we sold. Okay. So this, for example, if we went back, I'm going to put a little oval there. The first oval, let's take that one off. And we could go back and say, where was the previous trade if we wanted to? We know we had one. But I think that was the secondary trade. So that's where the entry was. This is where the exit was. Now, it also kind of goes back to if the investor says, James, I do not want to hold in over the earnings, okay? Well, it just so happens that it's after the market. Now, I know how you feel. A lot of people say, could you just go up to my targets? That way I can sell right at the target and where I don't have to hold over earnings. That won't always happen like that, but on this one it did. Now, the other one I just want to make mention of just briefly is this PM, which looks a little ripe, okay? Long, we talked about Philip Morris for a while, okay? And what you're now going to notice is Philip Morris still kind of grinding away, and that's sitting on about 55% of the maximum gain. 46 days to expiration. We click on that 155 right there. This has been in over 10 days, okay? Now here's the deal. We're sitting at 55%. If we said, look, what's the goal if we have more than 20 days to expiration? Answer, well, the goal that the paper money account's gonna have, 65%, okay? So what was the debit on that trade? It was about 280, okay? The difference there. So we want to watch over the next day or two. Could we get to that target? Okay, could we actually get to that target? If we go to about 65%, that one might be coming off pretty quickly. Now, I'm also going to just say one more just real quick on the monster. Okay, we talked about a number of companies that have some of their balance sheet assets in cryptocurrency. Okay, not recommending crypto. Okay, I'm just saying they have assets of Bitcoin on their balance sheet. The other one we need to make mention of is this one, which has 11 days remaining. And if you look at that MicroStrategy, that is also pretty ripe as well at 86%. Now, these aren't the only ones, but what we're going to do is going to right click on that, create closing order, and then buy it. Now, let's go back and show as a listener, okay, where was the entry? Well, we go back to the chart and let's pull this up so we can put a circle on it so we can get a full learning lesson. MSTR, and the 22nd, it was really right there. Grade the entry in the paper money account. Would you say that was a decent entry right there? I'm pointing to 422. How would you grade that entry? Would you say, James, that was sloppy? Would you say it was pretty timely? Was it on the first day of the breakout? Was it on the first day of close above the high of the low day? We would say, yeah, that was probably a decent entry. Now, we go back to this and say, okay, if we get out now based upon the percentage being hit, well, it also, notice here today that this is the first time we've seen the price down below the moving averages. Now, wait, is below the moving averages good or bad? Well, no, above the moving averages, that's momentum and trend, bullish. If the price is below the moving averages, boo, boo. This is negative momentum, okay? This is negative trend in the shorter term. So seeing that price drop down below that line, some investors might say, I'm going to sell because we're trying to have positions in the paper money account that are above the moving averages to try to have trend in our back and momentum in our back. Do you understand that? I'm telling you, it took me 10 years to really get it. And when I finally realized it, I was like, my gosh, why didn't someone just say, hey, James, wake up, okay? If you notice when you have losing positions, it's when the price is below the 10-period moving average. And if that stock is below the 30 or the 50 or the 200, it is ugly. Adrian, okay? And you probably don't want to bring it up or talk about it. You know exactly where I'm going with that, okay? Now, what we're going to do on the Monster is we're going to go back to this and we're going to bring up this position right here. We're going to right click and we're going to create a closing order and then we're going to buy it back. Now, if we take a look at this, what I want you to kind of understand is when you look at this, just checking something just real quick. Okay, when we also go back to this, you're going to see, I'm going to create a closing order and I'm going to buy it back. And what you're now going to see is we're going to send this order. Note the commission as well, okay? So note that commission as well, and we're going to get out of the trade, okay? Send the order. Now, what I'm going to do in this case is now let's spend the rest of the time, 17, 18 minutes or so, and talk about some new examples, okay? Some new ones. Now, I got to ask you a question. What was the sectors we were talking about before? Industrials, technology, communications, right? Financials. We don't do top-down analysis to waste 5 minutes in the start of the session. There's a reason why we're talking about that. Because we're wondering where those bullish positions could be coming from and where is the cheddar, honey, or money flowing to that's creating the momentum and trends. Now, what are some of those stocks? Now, one of the stocks that I really want to bring up just real quick is IBM. Now, by the way, does it help you as a listener to say, hey, James, it's helpful when you go back and show me where were the entries. It also helps me kind of go back and say, where were the exits, that I can see those ovals. What you should probably see over time is there's patterns to that, okay? Now, IBM. Now, I want to go back to IBM just real quick, and I want to bring up a trade. Now, there was someone, I'm joking, it was me, okay? Let me just kind of confront this now. There was a guy that looked just like me, okay, that literally did an IBM trade, okay, in the paper money account, okay? So if I bring up the IRA account, you're going to see that where is that IBM? Oh, no, not that. That's, okay, so that's the bullish trade, but I could have sworn maybe that stopped out. So maybe that is our last position. Let me just double check this. Yeah, I don't see it. So maybe it got stopped out. Anyway, I'm believing that IBM had a position that most likely got stomped out. But what you're going to see is we also had another position of IBM, and this was really more of a vertical. Now, first off, and the reason why I call it a vertical, and by the way, it's labeled here as a short put. That's fine, okay? Short put, people don't normally think that they're going to buy a put below. We do that just to limit how much is being set aside for the risk, okay, and assignment. But if we take a look at this, that's at 97%. Now, some investors might say if we went back to the IBM chart, is IBM starting to kind of show some signs of breaching levels of resistance? Okay, now, if we were to look at this and draw a diagonal line down, okay, diagonal line, what you're now going to notice is on the bottom, and we said this last week, that so many things out there, they kind of look like symmetrical triangles or ascending triangles, okay? And we talked about trading what's on the chart potentially per the rule set of the investor, and also not kind of like letting our thoughts, yeah, they could be there, but seeing what the chart was showing, okay? And we're trying to align trades that match the charts and not feelings, okay? Now, if we look at this on the right-hand side, would you say that's a potential breakout? James, I don't think I do. I don't think I do. Based on what I saw probably about an hour ago, the answer is no, okay? Now, if we looked at that on 5-2, what you're going to see is some investors might say, James, that's a breakout. Now, if you're getting a breakout in price, if we zoom in just real quick, there's a recent crossover, okay? I'm going to tell you right now, just because there's a crossover, just because there's a hold, that doesn't necessarily, technicals are just technicals. The investor then decides if they want to take the entry that has risk associated with it. Now, if we go for the very next day, that we are on day 2. Now, also notice where the movement, where the price went down to this morning. It went right down to the moving averages. Now, I'm going to invite you that when we see a down market at the open, consider not feeling emotionally depressed. You should be saying, okay, down market, but where are the prices in relationship to the moving averages? If you have a down morning and the prices are down near support, that does not mean they're going to close there. Okay? Now, first thing we're going to do on IBM, let's close this one out. Okay? So let me kind of show all the positions we have so far. Okay? And now, if we take a look at this, pull them up and say, okay, what do we got? Okay? The one we're looking at right here is really IBM. We're going to take that position, right click, create closing order. We're going to buy that back. Okay. Now, when we buy that back, we're going to buy it back closer to 0, which probably means you have a higher percent, or does mean you have a higher percent of the maximum gain. We're going to close that one down. With that $8 comes a commission. Note that. And what we're going to do is send the order. Now, what we're going to do is we're going to put on a new trade there. Okay. Now, I know what you're thinking. You might be thinking, well, James, I wish I could have gotten in on Friday because that wick went right. Man, I feel like we're just hammering that lately. The wick went right down to the diagonal line. I mean, within pennies. Someone's watching this, okay? Now, if you look at that, and by the end of the day, it pushed right back up. Today, we fell down to the moving average. Doink. Now, by the way, when we were down near the moving average, it was at 244 in the morning, which, by the way, we're not too far after the morning. And then $5 later, it pushed up. Now, does it always do that? No. But just kind of interesting how patterns sometimes play themselves out. Now, what we're going to do is we're going to come back into this, and we're going to put it back in the paper money account. We're going to go back to IBM, not the Mays. We're going to go down to the Junes, okay? I don't care how well someone could read the technical analysis. At the end of the day, it comes down to, so what's the potential investment trade idea? Now, if you said, James, I'm trading paper money, that's fine. Practice something. Practice. The way you learn is by practicing, okay? So let's practice. Now, what we're going to do is, let's say the investor said, James, I want to be more bullish. I want to have more upside potential. Okay. Now, if I go back to, let's say, that IBM and say, what is that upside on that? Where might that stock go to? Takers on that? Calling all technicians. Where do you see it? If it went up, where might you say it could go up to here? And it might be a level or two. Now, if we're kind of talking about some levels, we might say, James, I see a level maybe right about 255, a level there, and I kind of look like we're at 264. Now, we talk a lot about channels, and we talk about if the stock can get inside the old support, the new potential resistance, the path of least resistance is that it could go up to the next level resistance. And if it can break above that, it could turn into new potential support, and the path of least resistance could be that it might try to go up to the top. But we don't know if it's going to do that, right? But technicians are really trading levels. Now, what I'm going to do is I'm going to come back over here to this side here. And what we're going to do in this case is we're going to buy a long call at the 245, which is really the at the money strike, and then sell a higher strike. So notice that is right there. We're buying the 245. Now, if you buy the 245, what is that position? What do you want the position to do? If you buy a call, you want the stock to go up, right? Second, if we sell a call above us, that caps the upside gain and creates the vertical spread. Now, in this case, in the margin account, which I'm going to do this, I'm going to do in both. We're going to do one contract, let's say in the margin account, and then two contracts in the IRA. If we go confirm and send, what we're now going to do is, when I click on confirm send, right at the bottom right, you'll see what it says single account. We're going to do both accounts. So if we had two accounts underneath the same username and password, there's one for the margin, and I'm going to do two for the IRA. The buying power effect is really what the max loss is given the vertical. So in the margin account, max loss given the vertical, 285. IRA, if we did two contracts, buying power effect, 570. Why? Two contracts, okay? Now, what you're also going to see is the commission is going to be for three contracts. We're going to go ahead and send the order, and it fills, okay? Now, the one thing I also do want to do is I want to kind of point back a little bit to financials for just a moment, okay? If someone were to ask you what financial stocks are getting a little push, well, if you look at, let's say, stocks like American Express, does it look bearish to you? It's just a question. Does it look bearish? Man, if we thought, man, this is making a bear flag, and we thought it was going to stay below this level, yeah, that didn't hold. I thought it was going to actually stay below this level, yeah, that didn't hold. Okay, so we're kind of slicing away some of those bearish investors' resistance lines, and now the stock in the shorter term pokey to the upside. Now, it's not just American Express. Okay, when you look at Visa, and this just kind of goes back to just people swiping a debit card. Okay, swipe, okay, getting those processing fees. And if you look at, let's say, MasterCard, okay, huge run. If we also, now let me give you a kind of a little riddle here, or a little, can you get this one? Name a stock that starts with T in the Dow that's in financials that a lot of times we tend to gloss over, okay? Can anyone name it? Starts with a T, it's in the Dow. And if you look at the Dow on a daily basis, you would know that. TRV. If you look at TRV, that's actually one of the travelers, okay? It's one of the few stocks that is also shot up quite strongly. And this is what I'm talking about, a classic V pattern, where it went down aggressively and almost in the same duration of time shot back to the upside in almost the same amount of period of time. Significance. What is that? Why does it matter? Well, if you go down and quickly and you go up quickly, that could be where investors are just saying, look, the news that will push it down, it's over. Okay, matter of fact, we don't really care about it. We want to buy it on that news that we don't think is super relevant long-term to the company. Okay, among other things. Now, we're going to use the example of travelers for just a second. If I look at a 3-year weekly chart, this really does kind of look like a longer term bull fleek, okay? So when you take a look at this, a little run to the upside, little pullback, and I don't know about you, but I can see bull flags the best afterwards. And I know what you're thinking. If I was watching, this is exactly where I would have gotten in. And then we all say that, okay? A little fun there. Now, if we take a look at this, you're now going to see that we went up, but we didn't really have the flag like we did before. It was kind of a little stiffer. What do we mean by stiffer? Well, it kind of created like a trading range. If this was 100% of the move, okay, it kind of pulled back about half and created a channel. The word of the day is channel. And if you look at kind of that bottom end, it's probably about 235. And the top of the resistance, okay, is really about 265. So what are we going to do with the information? Well, sometimes in technical analysis, some technicians might be forecasting. They don't know if it's going to go there. They might say, James, in the short term to intermediate term, perhaps, might try to target 295. Okay, now we don't know if it's going to hit that. But what I'm going to do in this case is let's do a stock trade. Okay, we're going to do this in the IRA, and let's buy some shares here. We can do this quickly. TRV. Okay. What I'm going to do is going to go to the ask price on the stock, right click, buy custom with OCO bracket. Okay. Now, before I forget, what I'm going to do is that number that we talked about, that 295, we're going to try to show the example of selling out maybe just a little bit before that. Because wonder if we drew the line a little off. Okay. And remember that support resistance is an area, so I'm going to do a little bit less. What if it goes higher? Then you wish, probably the investor wishes, probably they put 295. But we're going to say, look, maybe we're a little high on that target, 294. And what I'm going to do is I'm going to go back to that and say, where's the potential higher low area? Where do we have a higher low area? Well, remember, I've taught you higher lows ad nauseum. Okay, you should say, James, I can see it exactly. The higher lows, when you're looking at upward trending chart, the easiest answer ever, it's the red and green candle. The red candle signifies the pullback. The green candle signifies the up move. Okay? Circle it. Don't overthink it. Now, James, well, where's the higher low? You could just kind of draw it like that and say, I'm going to set my stop underneath 260, giving it a little bit more room. Or some people like to set stops a little tighter. They might say, James, 263. We're going to give it a little bit more breathing room, like less, we're going to put the stop underneath 260, less 2%, 260, less 2%, and it's going to get us 254.80, okay? Now, what I'm going to do is go 254.80, and I'm going to put that right there, so 254.80, okay? Hard to be good at exits if we never have an exit order to begin with. Now, in the portfolio that we're trading out of, in the IRA, we're usually investing about $6,500 worth of capital. In terms of the number of shares that would be 6,500, you're going to see that it is about 24 shares. Once we know how many shares that is, we'll just type 24 in, and there she is. Okay? Now remember, that limit order is saying this price or less. If we get filled, sell at that price or higher. If we own the stock, in the paper money account, sell if it gets to that price or less. Confirm send, and there's the order. Okay, now let me kind of talk about, just in 60 seconds, some other stocks that some investors might be watching. Okay, I'm gonna go ahead and send that order. Now, what are some of these stocks that maybe some investors are watching? Number one stock, keep an eye on Boeing. Boeing has been one that twice it's dumped down in price and immediately shot back up. Boeing in the industrial area, could it finally break out of that resistance area? We talked about cybersecurity stocks, okay? And when we talk about Fortinet, we also talked about CrowdStrike, okay? Which is another one there. And you're going to notice that that's had a pretty good push. The other one I think someone mentioned was Okta, okay? And you're going to see that also we have PANW, Palo Alto Networks. We'll include that But really the Fortinet and the CrowdStrike, those are the ones we kind of really talked about in terms of cybersecurity. Also keep an eye on, let's say, a stock like Fast, okay? One of the stocks that I talked about today on X was Dash or DoorDash. Some unusual trends happening there. And also when we talk about that, even a stock, speaking back to industrials in the last one, is GE. A monster rally off the bottom. And if you go back and really take a look at this on a 3-year weekly, not too far off of making a brand new high and a crossover on the intermediate chart as well. Your homework is to actually go out and practice trading some of these stocks that are in channels, okay? Practice some of these stocks, breakout examples that we talked about from Friday, and practice putting on stock trades or option trades and the paper money account, and practice what you're seeing. 2 or 3 of them at least, okay? Could be stocks or options. Now, stay tuned for our next webcast coming up right at the top of the hour. Also, remember that with what we discussed, you can go to schwab.com/Schwab coaching and get the calendar. And what you're now going to notice is if we click on that live webcast and virtual workshop, right on this Monday, we can actually see the classes that are coming up. So make sure you're aware of that, and we could see that right here. So the next class coming up, Trading Covered Calls and Short Puts with Mr. Michael Fairborn. I want to say thanks to Brent and thanks to all of you. And also remember, with what we discussed here today, it was done for example and illustrative purposes only. And this has been the class on trading with technical indicators. Thanks so much and have a great day. Take care. Bye-bye.